If you overstate your revenue, the auditor will tell you to reduce it, Abi?
Yes.
Okay. If you overstate your revenue, what is the corresponding entry that will be affected? Is your trade receivable. Is that not?
Yes.
Let's look at our trade receivable. This is it. Let's pick it. Therefore, that's the next GL line, Abi. Which means the first adjustment auditor is giving us. Is this adjustment? Now, auditors can reference it. They can call it AGE. That one is adjustment. AGE1. Any name they want to call it. That's just reference so that they can reference it. They say being overstatement of revenue arising from duplication of invoice. That's what auditor gave you, Abi. Give me how much? How much? Let me say 20,000. Or let me say 80,000. Therefore, this is the adjustment given to you. Abi? What other adjustment? Give me another one. Give me another one.
Debts. Bad debts.
Bad debt. Okay, let's look out for our bad debt here. Bad debts accounts. My bad debt is this. Okay, probably we overwrote up bad debt or we underwrote up bad debt. Okay, it's also going to affect trade receivable.
Yes.
Okay, which means our bad debt was understated by 5,000. Abi?
Yes.
Being understatement of bad debt written off of a delinquent long outstanding balance. Okay, let's just assume that these are the two entries. Okay, let me say another entry is reclass. This is AJ2. Let me do the third one as a class. What are we reclassing? Let me reclass something here. Let's go back to our trial balance. Let's reclass. We have computer IT equipment, Abi?
Yes.
Let's say this IT equipment supposed to be a component of software. It came together, you understand? Let me just give an example like that. That this IT equipment is supposed to be part of intangible assets. Are you getting what I'm saying now?
Yes.
Okay. Therefore, I'll pick this GL. These two accounts are affected. Eh?
Okay.
Therefore, we are reclassing okay. Doing a classification off from IT equipment, IT computer equipment to software arising from wrong componentization. Just like that, Abby, which means we have to reclass this entire line. And when you are classing the entire line, the total amount there have to be reclassed. Therefore, I'm not going to put amount there, but I'm just reclassifying the end. And as I classify it, I'm also going to reclassify the accumulated depreciation. Are you getting it now? Yeah. Because depreciation also go hand in hand. But if I'm not classifying all of the items, I'll pass it as an adjustment. But you see what I want to do. I'm not going to put amount. I'm classifying it as a O. If it's not O, therefore amount, I'll go and post, and I'll show you the difference. You see this? Now let's say this is the audit adjustment. What will I do? I'll come here to my trial balance here and pass the audit adjustment. Now, the first one, all this reclassification, what they are telling me is, since it's the entire line is what I'm to reclassify, I'll come here and say, instead of computer equipment, it's now intangible. I'll just do the drop down, but because I've converted the drop down, that's why I'm copying and pasting. I also come here, the same thing. That is reclassification of the entire cycle. Otherwise, if it's just reclassify part of it out, I'll come here and do debit, credits. Okay? Similar to what I will have done here now. See what I'll do now for this. PMS, I have to debit it by 80 and credit trade payable by that. I'll come here and say PMS. My trade payable, trade receivable, I'll start to credit it. I'll link it to my journal so that I can always trace it back. My revenue that was overstated, I look for the GL. I was told to debit it. I link it to my journal. What else? Bad debts. Bad debt was overstated, understated. I'm to debit it more. How much? 5,000. And my trade payable overstated. There's another adjustment that have to be credited to trade payable. Now, I've done my adjustments. I can't see Miwa and Oladimeji. Are they part of us?
I'm here. I'm still here.
Please let us put up it's a standard requirement, please. Oladimeji, Miwa, we can't see you. Okay, now see what will happen. Since it's a template that has been developed, come to your revenue and you see how our revenue will be impacted. Take note. This was 125. Let us see what it will result to. Take note. Bad debt is part of admin expenses. See what it will result to. Take note. Under balance sheets, PPE will be affected for the 2 years because we have reclassified the entire line. Receivables will be affected just in 2019 because we did some adjustments. Retained earnings will change for each of the years for the current year because of the adjustments. Trade receivable will change. Yeah. What else will be affected? I think those are the lines that will change from that adjustment. Now let us see. On a click of a button, go back here and click what? Refresh. Our account will still come back to balance. And you can see, you can compare where the adjustment is. Can you see that the adjustment has thrown our trade receivable to negative? What it simply means is that there are some customers that have even deposited more that have not collected goods. Do you get it now? If I don't want it to throw to negative, let me just go back and reduce the adjustment to 20. So that I can show something normal. Now, you can see it was, let us pick it one by one. This was 482 now, but 528 before. 201 now, but 220 before. Is that not?
Yes.
This one was 10 now, 35 before. 261 now, 286 before. Come to income statement. One to 36 now. 1256 because of overstatement of revenue. Bad debts. Does that make sense?
Yes.
Which means now, apart from this, let me now say my trial balance. Let me go back to our trial balance. This trial balance, let me copy it and change the figure totally. The way we did the other time. Should I multiply by 3?
Yes.
If I multiply by 3, I'll just come here to paste it. The next thing, I come back here. I change everything. And that's my account. Now, all of what we've done here is what we now link to our notes. So that at every point in time, I don't need to do anything. Now let me link it to my notes. Revenue, from sale of PMS, AGO, DPK,
Okay.
cost of sales, PMS, AGO, DPK, and write-off. Therefore, what will I do? I just link it at a setup. Once I set it up once, it's for life. I come here. I come back to my revenue. This PMS. AGO. And DPK. Okay. For cost of sales, I come here. We now have write-off. Now, let me do one or two. Operating segment is there. Let's just take this out. Let me read it. I'll come back to employee cost. Let me do administrative. What are the lines of administrative expenses do you have? Yeah.
Personnel costs.
These are the lines you have.
Auditor's fee.
I can just pick these lines. I can copy and paste them somewhere. Let me find one sheet here. These are the lines, eh? Therefore, what I need is just this in alphabetical order. I'll come here to my notes. I'll come to my notes and paste them here. Let me unmark this cell. Okay. Okay. Once you set it up once, there's something wrong about the amortization. We'll come back there and we'll use audit adjustment to correct it. But it's showing us negative. That is an expense line in credit. You have to investigate it. Depreciation. Remember, all what we are doing now is just set up. And you set up once in a lifetime, subject to adjustments. Yes. Okay. I can sum this up. And this gives me my total. Okay. Now, let us go to the amortization and see what is wrong. I can easily click here and see the breakdown. Now, I have 60,000 on credit side of amortized ROI, and supposed to be 20,000. Supposed to be 20,000 there. Therefore, there's an error somewhere. Therefore, let us assume that that error is part of error we have to correct. I'll come here. The item is supposed to be a debit balance, but we have overstated it to a credit balance. Therefore, there's an adjustment of 80,000. Let's assume the 80,000 affects where? Which line did it affect? Can somebody, which line can we say 80,000 affects? $80,000 is too big. Do you have any items up to 80,000?
No.
Let's just say run entry of cash balance. Let me just find where I can. 80,000 is too big. How come we have that? Okay, I think what I'll do is that instead of treat it as error, let me just correct it directly. Don't let me treat it as error. Let me just correct it directly, which means from my trial balance, from my TB, this is where the issue came from. But it is, even here, it's supposed to be debit or credit. Okay. This 20,000. There's a difference of 60. Let me add that 60 to, let me add that 60 to share premium. No, it's 40, not 60. I think the trial balance agrees now. Therefore, let me return it back to our trial balance here. Let me return our figures the way it was before. Okay, now let's go back to our expense line. Everything will correct itself now. Can you see? Now I've returned it to our initial trial balance. Now, what do I need to do here? Just copy and paste the same way I told you earlier in the setup. Copy and paste. Copy and paste. And therefore, what will I do? This is showing you that it's picking from audited. Now, I want it to pick from prior. I'll just click here, click all those lengths. And copy and replace. What do I have here before? I have audited closing balance. I'll put it here. What do I have here? I have prior. I'll put it here. And I replace. No, sorry, not here. I come back here. I copy this. Just pick everything and replace. Something item replaced. This is my prior and everything. Once I do that up to the end, at any point in time I update my trial balance, it's populating all the accounts for me once and for all. Now, employee costs. Okay, You can break employee costs into the following. I think we have about how many lines? Let's go back to our template here. We have about 5 lines. Copies for 2018. I also do the same thing. Now, at the end of the day, what do you find out? You find out that at every point in time, your account is prepared. At every point in time, your account is prepared. Which means if you go and copy a neutral balance, probably we go again. Let's assume that you are not, let's assume that you are not doing this per year. Let me say this is, can we say it's times 5? Should we do times 5? Or let me do times 100.
Times 100.
Times 100. Can we mute? There's noise at the background, please. Okay, let me copy this. Now, let's come here and see our accounts. Data, refresh. And that is it. Come to your income statement. That is it. Come to your statement of changes in equity. That is it. Come to your notes. That is it. Up to that, up to this. Okay. Now, your auditor will tell you for every account you send a financial statement, you'll say generate schedules or lead sheets. Now, this is a lead sheet. for everything here. For example, if I want to generate what make up my cash and cash equivalent as a whole, once I click here, it will generate it. I can see what make it up. If I said, no, I don't want to see that as a whole, I just want to see for cash at bank, which bank do I have balances that are positive? It will show I only have in Zenith Bank and this other one that doesn't have a name. Okay, which bank are we having overdraft? Bank overdraft. FCMB, UBA, EcoBank, GTB. We can see everything there. Which means my revenue. What is my, okay, not that. Let me find something else I can break down. Okay, what constitutes our repairs and maintenance is so huge. These are items that constitute repairs and maintenance, and they break down based on prior year, current year, and etc. These are how easy it is for you going forward to present accounts. Any question? Any question?
Sorry.
Yeah.
I want to ask this question, like when you are explaining in the morning, you said we should, in case for our financial statements, we can put USD and NGN side by side.
Yes.
Can you? I just wanted to demonstrate how it will look like if we put USD and NGN side by side.
How it will look like? How it's going to look like is what I've shown you in the financial statement of Seplat. I get what I'm saying now.
Okay.
I didn't get the one you are saying that how will it look like?
Like this one, for example, if this is our NGN accounts.
Yes.
Now we now want to translate it to USD on the same page.
It's very simple. Let me show you something here. Imagine you have USD. You have translated it whether on your accounting system like Sage and Co, or you have translated it on Excel. Either the case, depending on how robust your application is. I can come here and come here. I can come here and say, let me just choose an average rate. Let me say I'm translating it. I'll call this audited balance USD. Let me say I just choose an average rate. Now let me say I use an average rate of, let me say I use 400.
Okay.
Let me say I use 400. Sorry. I'll just say this value is 400. Let me just assume flat rates like that. Let's say this is the dollar amount. Eh?
Okay.
Are you there?
Yes.
Since I created this as table, when I come to this, my pivots, I come back to my analysis. I throw away my field. It will show me the USD. Okay, my USD is not there. Where is it? Okay, let me refresh. If not, that means I didn't create it as a table. My USD is there. Can you see it here?
Okay.
Can you see it?
Yes.
I just bring my USD, I put it here. I close it up. I come here. Now that's my USD.
Okay.
What I will do to my USD, just look up. Supposing this is Naira. I can extend this and say USD. Sorry, 1 minute. I want to pick a call. Very important. Sorry.
What does that mean?
L'état, comment tu fais? Sorry, we can't hear you, sir.
Sorry, I said,
Okay.
sorry, I said this is dollar side and I've copied dollar, okay? Now I'll change this to dollar. And the dollar is not in thousands because by the time I divide by 400, it's already small item. Okay? Now, this is my dollar. Now, what I'll do is, instead of using audited closing balance, I'll now use audited closing balance dollar. If you remember, if you come here, what do you have? Audited closing account dollar. I just copy it and put it here. Come back to my sheets. Where is it? Accounts. Now, I'm putting my dollar account side by side. Now, why is it showing this error? Because I've not done my profit or loss. Remember, it also flows from profit or loss. Can you remember?
Yes.
Okay, I'll create it profit or loss. Let me also extend the profit or loss chart. I created 2 lines in between. Therefore, I must replicate that so that it aligns. 2 lines, 1, 2. Therefore, I create it here. Okay. This 2019 USD. Okay. Also, I come back here, replace all. And when I come back here, you find out that my balance sheet agrees. Is that not?
Yes.
Side by side, you put it.
Yes.
Does that make sense, sir?
Yes.
Yes, sir. 131.
That's what we're saying.
Okay. Sorry, I still want to paint an additional scenario. If, for example, for instance, I think normally for our statement of profit or loss and other comprehensive, we normally use average rates for our statement of financial position, we normally use closing rates. If we are to use different rates, how will it flow?
No, that one is not using this exact template. You know, I've more or less simplified by saying use closing rate for all. Therefore, it won't be about foreign exchange translation differences. Okay. But if you are to follow the convention and requirement of IAS 21, ask yourself the following questions. Okay. Depending on whether you are using temporal method or closing rate method or the hybrid. Okay. Now, if you are using closing rate method, what you do is that all your balance sheet items are translated using closing rates, while your P&L items are translated using spot rates, if you can identify them, or average rates. Now, usually for things like revenue, you use average rate because revenue is every day. But certain items that are one-off item, you use the spot rate, or depending on your policy, but must be consistent. Now, when you do that, there's what we call a translation difference. Such a translation difference will go through other comprehensive income. It will always be like a balancing figure because of the mismatches. Because items in the balance sheet, some of them reflect in the income, and therefore you have used different rates for them. Therefore, all of those differences result in what we call foreign currency translation adjustments, which goes through other comprehensive income.
Thank you.
And as I've said, system will not replace your technicality and your professionalism, because system is a dummy. Does the system know about issue of which methodology, what is monetary item, what is not monetary? What do you understand? For example, if you are using temporal method, monetary item have to be translated at historical rate. Why not monetary? Monetary at closing rate, why not monetary at historical rate? All of those differences, system cannot understand unless I program it and I tell the system what to do. Are you getting it?
Yes.
That's just it.
Yes, sir.
Okay, I think at this level, I think I appreciate your participation. And
I have one question, please.
Yeah, what's the question, sir?
Sorry, I think from the schedule I'm looking at, we've not touched a statement of cash flow.
Okay, I think I've said something that cash flow statement will only take care of very few items, and I'm going to show you. But before I show you, let me take it back to our original trial balance. Let me go back to our original trial balance. I'm linking it back to original trial balance so that I can give you this working sheet. Okay, this is too small. Let me just do it like 4 naira. Let me just do it like 4 naira to $1. Don't you pray for us to have such?
Yes.
Okay. Now, let me refresh everything. Okay. At every point in time, it will agree. That is that. Okay. Let's now come to statement of cash flows. What do you need there? There are items that are straightforward. You
Okay.
just link them. I link this to my profit or loss.
Okay.
I link this to my income tax. I remember you're adding back your income tax, you put negative to reverse it, Abi.
Yes.
You know, there are basic items that you are just linking to your balance sheet and profit or loss. Okay, amortization, all of my amortization costs. I go to my notes. I already have that in my notes. Amortization. You know, because you understand everything. I'm adding it back. Depreciation. I go to my notes, or you can go to your notes, or you can still come back here where you have everything there. It's a mix of it because they are all flowing from the same point. Since I have my note, I might rather rely on my notes. Depreciation. Impairment loss. I refer to my notes. Impairment loss and bad debt. I'll just refer to my notes. I have the two together. All form of impairments, including bad debt. Now, this movement, you can easily do it subject to adjustment. Movement in your inventory, you set it up. If your inventory is increasing compared to last year, that means you are spending more. I put it in negative. But if it's reducing, you are earning more cash flow. And I come here, I say this minus this. I then close the bracket. Yeah. And I do it here. Whereas opposite is it for payables. I'm just giving you sample. Do you get what I'm saying now? I can't do for this because I don't have the 2017. Are you getting it now? Like
Yes,
that, you
yes.
continue your tax paid. In your tax account here,
Yes.
you will have done your movement between last year and this year. And you'll have checked the schedule to know what was your tax last year, what's it this year, what increased it, what reduced it. And you fit, you know, in statement of cash flow, you have to go to your GA and get some information about how much was paid. You collect all your payments. How much withholding tax did you utilize? You understand? It is not system that will do that entirely for you. It's not. I get me. That's why I said system will do 90 to 95%. Your understanding will now come and plug and play the remaining 5%. Am I making sense, sir?
Yes.
Yeah. And that is it. Which means on that premise, that is how you complete all of your cash flow. Like now, here, we have dividend paid. You just come here straight and pick your dividend amount from your statement of changes in equity. Once you set some basic parameter, the other balance is where you now look for information from your GL. How much tax paid? You go there to spool it out. We had additional paid in capital. Proceeds from issue of shares. Now this procedure, remember, we issue shares. I'll just come here under my statement of trade equity, pick the entire amount, this and this, or you pick the 340 straightforward. You put it there. Now, issue of additions and subtractions, you pick it from your fixed asset schedule. For example, if you have your fixed asset schedule here, I can just first of all pick the summaries. The summaries are what you have here. Leasehold property. Freehold property. Motor vehicle. Office equipment. Capital work in progress. Furniture and fitting. Plant and machinery. Have I done that? 375. Let me check. No. Plant and machinery, no. Freehold properties that I've not done plant and machinery. Let me come to the notes. This one is freehold property. Now, for 2019, I'll just copy and paste. And I can easily come back to control audit. what I need is and I come back to here. Now from here, you can build up your fixed asset schedule. Is that okay? You can
Yes.
build up from your last year, cost, this, that, and link everything, and you get your results.
Okay.
And from here, from your cash flow statement, you can pick some items from here, additions. You just link it to the additions here. Disposal, you link it to disposal here. You know, very straightforward. You understand? That's why I told you that it's only statement of cash flow that is the exception in all, because you need to go and look for cash items that you are going to adjust for appropriately. For example, now, your cash balance here, you pick it from your position in your note here. Let me pick your notes. You have cash and cash equivalent here. I can pick it from note here. Okay, and this one too, I can pick it from here. And I'll show you. Now, let me go back to the note. What is my cash position? I have it here. Cash in hand. Cash at bank. That's demand deposits. Tenor deposits. My bank overdraft. Therefore, if you come here, it has already picked it from here. 39. Are you seeing it? Now,
Yes.
I can come back here to my notes, copy the same thing here, copy it here, and just control. Am I making sense, sir?
Yes.
That is it. I believe I've made justice to it. Okay.
Honestly, you've done wonderfully good. But I just want to seek your indulgence. We will actually go back and practice more on this so that we'll also be conversant of how to prepare standard financial statements. But in a situation whereby we have any gray area, can we come back to you?
Yeah, you can always come back. You can always come back. But there's something I also want to, that's why you should go back and take time and look at it yourself. But that's why in my proposal to you guys, I can also come and sit down to develop for your entities so that the template, template means that both note, disclosure, every information, end to end, I'll develop it, map it for you guys, do the chart, do everything. The only thing you guys should now be doing going forward is if you have any new line, you just be adjusting for those new lines, and that's all. You understand? But the beauty there is that I've delivered more than enough for you guys to sit down and learn it. The beauty then is that if you engage me to develop that for you, I'll be able to develop it. Are you getting it now?
Yes, yes.
Yeah.
Thank you very much, sir.
Okay. Any other question? In the absence of none, I think I will appreciate you guys for your patience, and we have more to do. And again, there are still other things we could train you guys on financial instruments, measurement, on impairment tests for receivables, on different things that requires technology or tools, in addition to understanding of the principles. Is that okay?
Okay, very well noted.
Yeah, thank you very much, and God bless you guys.
Thank you, sir.
Yeah. Thank you. Bye-bye.